Welcome back to a new breakdown video. I know it has been a while, but today we're back with a new breakdown on EURJPY that has brought me a collective of $2,147 in profits. So as of Tuesday, all these JPY pairs that you can see right here were setting up for a probable trade that we could take. But we're not going to just take all of them at once. We're going to separate the high probability trades from the lower probability trades. As you know, when it comes to trading, we would want to buy at support and sell at resistance. So we're going to go through these pairs and separate those that are at support and those that are at resistance. Because these were a buy trade, we are going to look for the trades that are at support, and the ones that are at resistance, we're going to remove them from the possible trades that we're going to take. So starting off with EURJPY. As you can see, on EURJPY, it came off this strong support level right here. So this will be one of the trades that we're possible going to take. We're going to go to the next. Right here, you see GBP JPY. This one also came off a strong support level right here. So this will also be one of the trades that we're possibly going to take. Moving on to USD JPY, we see right here, price also came off a support level right here. So this one would also be one of the possible trades that we're going to take. On to the next. As you can see right here, this is CAD JPY. At the moment this trade was setting up, the CAD JPY was at a resistance level right here. And because we're looking for buys, I will not consider this trade as one of the possible trades that I'm going to take. Right here, you can see this level was previous support, got broken. And we know when support gets broken, it turns into resistance. Right here, we see resistance. And here, it is at this level. So that's why I wasn't looking at this trade. So we're going to remove this CAD JPY from our list. On to the next, NZD JPY. Right here, as you can see, this trade didn't have two retracement candles of the same color. So we had an impulse right here that didn't close above the previous structure, and the retracement is only one red candle. So this one will also be removed as the possible trade that we're going to take. So now we go to CHF JPY. As you can see right here, CHF JPY is at a resistance level. On the weekly, you can see the resistance level much better. As you can see right here, it was at a resistance level, displaying back one candle. And as I explained earlier, we're looking to buy at support and not to buy at resistance. Go back down on the daily, you see it is at a resistance level, and that's why I'm not going to consider this as one of the possible trades that I'm going to take. So this one we will also remove from our list. Now we move to the last one, SGD JPY. As you can see right here, this pair also came off a strong support level. So this will be considered as one of the trades that we're going to take. See the support level right here? And it came off with a bounce, support, and then bounce to the upside. So this is one of the possible trades we're going to take. Now we're going to look for which trades had the deepest pullback. As you know, I always like to look for the trades that have the deepest pullback because it shows me that there's no more room left to go any further to the downside and that the new impulse can start. I will give you an example right here. As you can see, Euro JPY came from here to here, have a pullback, impulse, new impulse, and we have a pullback to the previously broken structure. Right here, you see this pullback is very deep, testing this previous structure. With some trades, you will see that the pullback isn't that far deep. So as example, if we had an impulse to the upside, followed by a correction, a new impulse to the upside, and we would only have this small pullback to form a possibly new impulse, you will see right here, there is still room left to have a pullback to test the previous structure. If you compare this pullback to this pullback, you see there is no more room left to go down to retest the previously broken structure. So in my eyes, that would be a higher probability because it has a deep pullback retesting previous structure. Right here, this would be a lower probability because the pullback wasn't that deep and it didn't retest the previous structure. So right now, we're going to separate the deeper pullback from the less deeper pullback. So we can trim it down so that we have one or two trades that we're going to take. So starting on EURJPY, we can see the pullback right here is very deep, retesting previous structure. Now we move to the next, GBP JPY. As you can see on GBP JPY, the pullback wasn't as deep as that of EURJPY because if the pullback had been way much deeper right here, retesting this level, then I would consider it. But right now, EURJPY is in my eyes a better trade than this one because you see all the space here for price to pull back and form the new impulse. Right now, you can say, all right, I'll take the trade and the new impulse will form, but there's a possibility that it can go deeper, retest the structure, and then go higher. So GBP, JPY, we're going to take off as the possible trade we're going to take. On to the next, USD, JPY. Then we go to SGD, JPY. On SGD JPY, we see this one had a very deep pullback like Euro JPY. You see right here, it retested the previous broken structure. As you can see right here, it had an impulse and retested the previous broken structure with a very deep pullback. So right now, the deepest pullbacks are Euro JPY and SGD JPY. So we're going to remove USD JPY and only look at Euro JPY and SGD JPY. In this video, I will only break down this trade, Euro JPY, and the SGD JPY, I will break down in another video. So as you already know, we always start off on the daily time frame. As you can see right here, we had an impulse right here, followed by a correction, a failed new impulse, followed by an impulse, a failed correction, followed by an impulse to the down. But then we came to this support level and had an impulse. Normally, the impulse should have broken the previous high and close above it, but in this case, I still took the trade. But normally, this is one of the rules that the impulse should have to close above the previous structure high. And I did break my rules, but I will explain why. So now we have an impulse followed by a correction of two daily candles of the same color. So then we go to the weekly time frame. On the weekly time frame, we can see price came down to this price at this impulse and came down to this support level right here, followed by a bullish engulfing, indicating that there is momentum to the upside. So on the weekly, we will draw our support and resistance that could be of influence. Right here, we can see that this level is a major support level on the weekly time frame. Here it was support, came back down, up, and with the new impulse to the downside, it stopped at this support level and found with this bullish engulfing new momentum to the upside. So now we go down back to the daily time frame. On the daily time frame, we draw our Fibonacci in the opposite direction to measure the new impulse. Right here, we put the Fibonacci on the end of the correction to the start of the correction. Then we go down to the 4 hour. On the 4 hour, we will be waiting for a break of the previous, we will be waiting for a break of the 61 level. Right here, you can see we had a clear break of this 61 level. So that means our entry will be on the 61 level and our TP will be at the negative 27 and the stop loss at the 88 normally. But in this case, I had to put my stop loss below this structure right here and my TP at the negative 27. Normally, my stop loss would be at the 88, but as you can see right here, we had all this structure here. So there was no space for me to put my stop loss then underneath this structure level. I could have put my stop loss right here, just below this level right here, but it would be much safer for me to put my stop loss below this structure level. So if price retrace and come to this level, it wouldn't be any issue. But if price retrace and break this level, then that will indicate that that was not the start of the new impulse. So it was much safer for me to put my stop loss below this level, and the probability of me getting my stop loss hit would have been way less. Yeah, would have been way less possible. So we put our stop loss right here below this level. And as you can see, right now, we're in the trade. We're in the trade right here with this pullback that tapped us in. The next, we can see the price broke and closed above this 38 level. That means our stop loss can now go to break even and we can ride the risk-free trade all the way to TP. So let's put our stop loss at break even. Right now, we're just riding the trade, waiting for TP. As you can see, TP has been smashed, just straight through our TP, going even further. So this was my breakdown on EURJPY. Appreciate y'all for being here. There will be more breakdown. My next breakdown will be on the SGDJPY. What were the reasons that I took that trade? I appreciate y'all for being here. Stay tuned. Peace.